Alitheia. His colleague who was with us last night just had a heart attack, so he's with her up at Mount Sinai. He's going to try and get back. But we had their securities lawyer, Ted. You want to introduce yourself briefly?
Yeah, hi, my name is Ted Bernhardt. I'm the counsel for Alitheia Holdings and the Chief Investment Officer, so I'll be filling in for Jared until he's able to get here.
Thank you. And we have another wonderful Jared, but it's Olivier Jared. And
Olivier Jared. So I'm an engineer and a banker and also working on alternative currencies.
Great. So we're going to let these two kind of pilot it and take it. And if Jared gets here, we'll bring him in, of course. But thank you all for being here. And I think you'll find it fascinating. I know blockchain is at the top of everybody's topic right now and schedule, and everybody wants to learn about it. And these are the experts. So, gentlemen, you have until 9. All right. Thank you. Thank you all.
Okay, sure. So this is a very broad topic, and maybe at some point we should get into a Q&A discussion with the audience. Just to tell you the way we approach it, actually, as I said in the introduction, I'm around technical topics linked to either finance or actually healthcare, and we have more discussion about blockchain and healthcare later in the afternoon at 2 p.m. But we are trying to solve some of the issues we have in transactions using this technology. There are positive and negatives, to be frank, and that's something that we keep asking to put on the table. It's a very interesting but very heavy technology today. There are new alternatives coming up that will make it more usable, but it still has a lot of opportunities. So one of the interesting projects I'd like to speak about, if we have the time, is actually one alternative currency that the founder, Michael Soventi, isn't showing today, but has created. And his goal is to use it as a minimal income for developing countries and possibly introduce it in Puerto Rico to help people reestablish their economy after the hurricane that they are still suffering from. So a little bit of finance applications. We look also at contracting in general. So contracting in healthcare, for example, between hospitals and providers and pharma companies and so on, where transactions need to be secure and traceable and everything. So that's a quick introduction.
And that's great. So as I said, I'm the corporate securities counsel for Alitheia, and I'll start by just giving you kind of a high level of what Alitheia is focused on and what we're doing. We are basically in the healthcare area. We're an investment fund, a hedge fund, that is one of the first funds to be put on the blockchain. We are using the Ethereum platform, and our goal, the whole company is basically built around the idea of transparency and auditability and accountability through an interlocking platform of smart contracts that are built into the tokens that we are offering. So the way the fund kind of works is we found a way to raise money using cryptocurrency as a financing source that fits within the current U.S. securities law framework, and then with that money we're able to focus on specific projects, particularly in the medical area, to help those projects grow and expand. And then we actually, through the contracts that are put in place, are able to monitor the flow of the cash flow, the transactions relating to the projects, the investment returns, and all those sorts of things. And so, I think at a really high level, having a company and a fund that's focused this directly on transparency of information and making sure that the information as it's generated is stored permanently and immediately accessible to participants in the ecosystem is one of the core advantages of what we're trying to do. So it's one of the first, it's an exciting fund in the sense that we're able to provide financing sources through this vehicle, but also specific advantages to projects where information access, like in the medical industry, is critical, and where the confidentiality is important, but transparency and communication of the information is important too. So that's kind of a high level overview of things.
So before we get deeper, is just to test the audience, because we may have different expectations. Who is very familiar with blockchain here, or who needs let's say who is very familiar? Okay, so we have 3 or 4 people. So I guess it's useful to give an overview of blockchain, at least to be all on the same page. So I'll give you a simple explanation, which you may complete, because I try to look at it a simple way. So essentially, blockchain is trying to solve the issue. Initially, it was created to solve the issue of having a centralized place where you have all your transactions, like a big bank 20 years ago, that could be vulnerable to attack, to all kind of fraud, transforming the transaction. I mean, you see it in the James Bond movies. Somebody comes and they just transfer $20 million from one account to another account. So so to get rid of these kind of issues, the idea is actually to not have a central place where you have all your transactions, but actually to distribute it. And you distribute it over a range of computers that can be around the world. And everybody has a piece of information, but actually some pieces are also redundant. So it seems heavy, and actually it is heavy, but we have to come back to this topic. But essentially you have a little bit of your ledger everywhere, and all of this is connected by kind of small lines in between the dots, if you want to connect the dots. And every time you have a new transaction, you get a new line, a new dot, a new line, a new dot. Because it's encrypted, it's supposed to be safe. As you may have heard, some of the cryptocurrencies actually have been hacked already, so there are ways also to hack it, so it's not perfect, but it's still very, very safe. It's distributed, so you don't know where exactly the information is at a given time, so you cannot attack just that specific server. And if something happens and the chain is broken, in a sense, it's very visible. So you know that something has happened, and you know that you have to fix it right now. Which actually makes it interesting, because the few cases of hacking that happened, which were on cryptocurrencies managed in different countries, but the blockchain was broken. So then the question was, okay, now we found a fraud, and it was almost unthinkable, so they were not prepared to do it. Are we now fixing the blockchain and resuming the blockchain? Or do we want to acknowledge that it was broken? It's an historical event, and we leave it broken, and we just move to something else. So it was so unthinkable at the time to consider it could be broken. So because of this, if you look at it now on a larger perspective, anything that needs several transactions, very confidential, very secure between partners around the world, and you need complete traceability, blockchain can be used. So in general, people are speaking about traceability of food, for example. So you know that your steak is coming from this cow, it is coming from Kentucky, and she was born, 600 days ago, and so on. Obviously, in healthcare, we are looking at all kinds of things. This afternoon, we'll speak of different contracting in healthcare. I'm working a lot in gene therapy. In gene therapy, most of the treatments are autologous today, so you need to have John Smith cells taken away to a lab, transformed, added with whatever DNA, and then brought back into John Smith's body. And you cannot give it to Jane because she will die from it. So you have to have complete integrity and complete follow-up of what's going on. So we are getting out of finance, but there is a lot of contracting. I think Accenture does its big contracting this way, and there are a lot of opportunities to be on the positive side. Then I'll come to a more difficult side. Yeah. Do you want to correct what I said?
No, that was great. The only thing I have to add is, first of all, your story of tracing the back. Second of all, I think that was a great overview, and the only thing that I would really add is, at a super high level, the advantage of sort of being on the blockchain are the ones that he was alluding to. First of all, the information is accessible from anywhere because it's in electronic format. Every transaction is recorded, so you have a permanent record that's recorded on the blockchain all the way from each stage of the transaction all the way through, and it's transparent so that the stakeholders can see what's going on. And on top of that, in the medical industry, obviously confidentiality is extremely important too. So the security of having a distributed, encrypted blockchain type platform that's, while there are instances of it being hacked, that is very difficult to hack because it's residing on so many different computers, and there's no one central point where you can break into it. It is particularly well suited for the medical industry, and so I think there's a lot of opportunities there. And as a securities lawyer and a regulatory lawyer, it makes me happy to see that we're finally getting to the stage where you can have information available, all of the information available in a form that's accessible but also secure for people.
So when you speak of blockchain, people think of cryptocurrency and Bitcoin. And they think, oh, all these people that sold their house, they put whatever $1 million they got from their house into Bitcoin when it was $20,000, expecting it goes to $400,000, and now it's $6,000. They are ruined, they lost their money. This is horrible. Why are people doing this and kind of things? Just speculation or whatever. So the short answer is let's not confuse cryptocurrency and blockchain itself. It's like confusing a casino and whatever, Chase Manhattan Bank. Cryptocurrencies are very volatile because by principle they are constructed to grow by themselves, in a sense, to increase in value. They increase in value only if people use them. It may be very fast, may be very slow, nobody knows. There are many cryptocurrencies on the market today. Some are safer, some are less safe. So let's not even speak of cryptocurrency, right. I would say in general. Let's focus on blockchain as a way to actually do safe contracting. The other piece we need to also address in general is I don't know if you have looked into this topic, you have found a number of criticism of the technology. There are different stages of this technology. Bitcoin, from what I understand, is based on a relatively old technology, and some others like Ethereum are based on new technologies. And this is essential in the sense that the old technologies are extremely heavy. You can imagine that this thing, which is ramifies into a number of servers around the world and duplicates and so on, can become humongous. So the numbers that you see in the press is Bitcoin alone, and sorry, I'm speaking of cryptocurrencies, but that's what you see the most. Bitcoin alone is, last year was using as much electricity to process as the country of Switzerland, and this year is going to the country of Ireland. So we have an entire, whatever, 4 or 5 nuclear plants or 10 coal plants or whatever just to run Bitcoin, which obviously from a sustainability standpoint is not good. The thing is getting bigger and bigger also on computers. So again, I could be corrected, but the last I've read is if you want really to be transacting Bitcoin today, you need to upload a blockchain on your computer, which is in the range of 200 gigabytes. So if you have a good laptop, a good Mac, that's okay. If you have just a Google book, it's already too much. And this will probably be multiplied by 4 or 5 within this year. So essentially, you cannot transact Bitcoin anymore on your laptop by the end of 2019 or something. So it's not viable. The other piece is the time for these transactions. So people say, yeah, I will have Bitcoins on my phone, I go to the store, I pay with my Bitcoin and so on. Today, because it's heavy, a transaction for what I've seen is between 7 minutes and 4 or 5 hours. So if you go buy your latte at Starbucks, it's not going to work. I mean, the line will be in the street. But the good thing is, first, new technologies are simpler than that. They are lighter than that. And what I understand of them is they're actually segments of chains. Instead of having a huge chain that is 7 years old and has ramified around the world, you have a segment of chain which is more specific to what you do, is lighter, faster, and everything. The other piece is, as you were speaking of transactions, when you speak of exchanging, let's say, the cargo of an oil tanker, so you have $200 million in an oil tanker of oil, this thing will take 1 week to move from, let's say, one of the producing countries to the US, and it actually changes hands several times during the trip, typically 5 or 6 times. But you can wait 7 minutes or 1 hour if you make a transaction of $200 million, and you want it to be secure as well. So even if the technology will take a little bit more time to be more friendly in terms of environment and in terms of time, for these huge transactions, it's still absolutely useful.
And I would just add to that. again, I don't want to go too far down sort of the cryptocurrency side of it, because a lot of the real value is, as he was saying, comes from being on the blockchain and the technology specifically associated with that. But I just wanted to point out that what Alitheia is doing is slightly different than some of the other cryptocurrencies, in that to eliminate some of that volatility, the Alitheia token that we've created is actually tied to and contractually connected to hard assets and company investments. And so while you still have some of that speculative volatility that relates to people just using it as a new medium of exchange, unlike many of the others, it's actually tangibly related to a particular asset or asset class or things like that. Last thing I swear on the token side of things, our coin is minted, not mined. So a lot of the issues that he's talking about in terms of the power that is required to generate these things don't come into play. We're trying to all the things that he described, we've been observing as well, and tried to set up a platform that was independent of that. And so the Alitheia platform is really focused also not on like buying your coffee or going to your local store or whatever. It's a financial platform that's designed to enable access to projects through the blockchain and the cryptocurrency vehicle, and a funding source for those as well. So, again, in the medical area, as we've been talking about, the accessibility, security, and transparency of putting all the transactions on the blockchain is really what drives the value to these things, even though it's a relatively new technology.
So you used two important words that maybe need explanation: minting versus mining.
Oh yeah, okay, yeah. Let me explain that. Yeah. So the process of mining is what he was just describing, which is where an individual can basically get ownership of brand newly issued tokens by simply processing algorithms on their computer over a period of time, and for doing that, after whatever it is, hours, days, or whatever, a new currency is created, a new token is created, and the person who created it gets the ownership of that token and the value of it. That's the mining approach, and it's become, as the blockchains have gotten longer and longer, as he was describing, the amount of time that it takes and the horsepower that it takes to get that done has expanded radically. And out in the Pacific Northwest, again, where I'm from, they've actually banned certain areas from doing cryptocurrency tokens processing, and the utility prices in some counties are being driven up just by people coming into those areas and doing that. So that's the mining approach. The minting approach is just simply where the company that is authorizing the tokens, just by a stroke of a pen or electronic signature or whatever, authorizes and creates the tokens and then distributes them over time. So there's not the technological cycle of creating them. That's a little bit of a legacy from the earlier days of the cryptocurrencies.
And if you want to play with it, there are actually a few sites that are very friendly. You can, without any fear, you can buy a few tokens and see what happens with these tokens. I did it. It's actually relatively fun. You get the key of a token is like whatever, 200 or 500 characters. Wow. Yeah. And your thing may have no value. It's like $1, $2, whatever.
Right.
But, the interesting piece is following the process and understanding by yourself how this works. Actually, it's quite easy to do once you get into it. And just maybe also to define token, because we would jump into it.
Oh yeah.
What is a token?
Yeah, what is a token? And I'll let you elaborate on this. I'll sort of talk about it from a legal perspective. So a token is, people refer to them as sort of an electronic currency. And if you go back to your Finance 101 course or whatever, currencies have certain functions to them. One of which is a store of value. One of which is exchange capabilities. There's some inflationary hedges sometimes, things like that. A cryptocurrency is basically it's a technological solution that mimics sort of the behaviors of currency or money, but it's not actually authorized by any one particular government entity or regulatory entity. Anyone with the technology can create it, but it basically acts like money. It looks a lot like money, but it isn't. It isn't officially sanctioned money, so people are able to use it for transactions, basically, exchange of goods and services, recording values, accounting, financial reporting, things like that. And why you're able to do that is sort of a combination of the creation of this electronic token, but within the token are parameters that are smart contracts, if you will, and those can be as detailed as you want, and they represent the legal characteristics of the token and its interaction with other people on the blockchain. And so what you have is you have sort of, instead of a dollar bill or a penny or a nickel or whatever, imagine you had that same thing. It's not officially sanctioned, say monopoly money. That's probably a horrible example, but say you have something that looks like a nickel or a dime, but imagine embedded into that is an electronic circuit that has all of the identifying information about the person who's using the token, who all they've interacted with in the past, who they're interacting with now, and it's all in like a big auditable chain of information that's related to that. So any transaction that is related to that particular token and the owner is recorded in there as well. So it's a much more comprehensive and sophisticated type of currency, but it also has a lot of the similar functions that you would expect from money. Like I said, like exchange value, store of value, and things like that.
So just to give a glimpse also on the use of healthcare, and again we'll have a panel at 2 p.m. on this, but if you take all these attributes we spoke about and you think of healthcare transactions, so first one is confidentiality and privacy. So there are HIPAA laws here to protect the patient confidentiality. There are laws around the world. The toughest ones actually that I know of are in Germany, where you cannot even have some patient information stored outside of the country. And overall it's tougher than HIPAA, if somebody can be tougher than HIPAA. So if you can put your patient information on a blockchain, you know that it's going to be somewhere protected, difficult to hack, and so on. The second piece is auditability. So if you had a hip replacement 5 years ago and you start getting into trouble, which a lawyer probably would understand as well.
Yes.
You want to know what was the serial number, who did the surgery, what kind of treatment you had, did you have some anti-infectious antibiotics used on your open wound and these kind of things. So all of this will be traceable through the different transactions that will have been recorded inside the blockchain. The third aspect is kind of inviolability or avoidance of fraud. So there is fraud in healthcare in every country as well, including the US. And for example, one aspect of fraud is if some transactions are not authorized or are not proper according to the government policies. So same thing, if all the transactions start to be recorded on the blockchain, you can trace them and find that there has been fraud in one place. One aspect of fraud is patient consent, which might be something relatively benign, but it's quite important, obviously, for the patient's, let's say, knowledge and everything. So you can kind of transaction typically also this way. And the last piece is just everything I spoke of is of moderate value. It's patient related, so it can be 10,000, $1 million now with some of the gene therapies. But when you speak of big contracts now between a hospital and a PBM or these kind of things, which are dozens or hundreds of millions of dollars, same thing, you can manage them as contracts via blockchain. So you take the attributes, it's essentially an exercise in creativity. You take the attributes, you take your needs, and you find the match. So as I see we start losing people, maybe we should go into a little bit of Q&A because we wrote a lot of things, please. Gentleman back here.
Coming from totally non-financial background, it sounds to me like the blockchain seems to be in healthcare. electronic medical records plus big data on the cloud, except that it's scattered over thousands of computers, as you said. My question is, what happens if one of the computers is not functioning or is, as an anecdote, in 2003 we had in New York a blackout. Next day people were wearing shirts saying, I survived the blackout of 2003. So what happens if electricity is cut in one of the countries?
Yes.
So I'm not an expert on that particular aspect, the technological aspects, but I'll do my best to answer that. So the technology, by the nature of the fact that this is all, so first of all, while that is going on, you do have a risk of not being able to access the network or whatever, which is obviously an issue in terms of local storage, backup, things like that. But in terms of the permanent record and everything that's related to the data that's in there, it's a distributed platform, so it's literally residing on millions of computers in the cloud all over the world, and so the record is still there for you, once the catastrophe has passed, or probably even if you could probably even access it from a different geography if it's like New York has a power outage or whatever.
Does it have redundancy?
Yes.
It does
Yes.
totally have,
Yes.
incredible redundancy, because not just redundancy like a server farm that has 3 different co-location facilities, like 1 million different computers have bits and pieces of this all throughout the world. So
Yeah, absolutely. No, it's like, if you want an analogy, it's like the internet today. If you write an email to your friend in Singapore, you have no idea where your email is going for. It may go to London, from London to whatever, Kazakhstan, and then Kazakhstan to Singapore. It doesn't matter. And if the computer in London is not available or down, or there is a blackout in London, it just goes another way. So it's about the same here. The information is distributed, it's redundant, and another path can be taken. So you shouldn't be stopped, which is contributing to the heaviness of the technology, but it's also its resilience.
But it doesn't break the chain.
It doesn't break the chain.
no.
The other thing I want to point on your comment is big data. So big data is another universe, and just in 2 minutes, because it used to be a fashionable word. Actually, I noticed in the conference last year that the fashion of big data starts to go down, but we shouldn't confuse big data and large data. So big data by nature is unshaped and unstructured. So a typical example of big data is marketing, and you want to have your next Starbucks shop somewhere around Grand Central, and you are going to capture into a database where people are going through with their cell phones when they go from the train to their office. And you'll find out that there are some gaps where there is no Starbucks today. This is the place to put your next shop. It's big data in the sense that it's completely unstructured. You don't know if this person has a dog or whatever. It doesn't matter for this specific exercise. You just want to see a mass of stuff and then kind of discern a trend. We do that in some cases in healthcare for research purposes and so on. We try to find some correlations between some habits and some disease or whatever. But when we speak of blockchain, it's the exact opposite. Everything is super structured, super organized, and super identified. So I just wanted to put it as a stick in the ground. There is blockchain and organized stuff and large data, and the other side is big data, unstructured, fuzzy, messy, and interesting, but it's a very different area. So we just there's a gentleman here and then there. Just to introduce you, as we started already, and we went a little bit in every direction already.
I am glad you did. Thank you. Guys, my name is Jared Elkins. I'm the president and CEO of Alitheia Holdings. We are taking the deep dive into blockchain as a financial instrument, and what we've done is we've taken the typical hedge fund environment, and what we've done is he was speaking to the superstructure of blockchain and the overarching transparency and immutability and all of the technologies inherent for encryption and everything else. What we've done is we looked at the hedge fund as a use case, and the more we dove into it, the more we realized it would solve so many problems in high finance, right? I mean, We all remember Enron and how all of that happened. That doesn't happen in the blockchain. Everybody sees step by step by step by step, and you can trace it all the way back to the origin. So we got to thinking about how do we do this, how do we get this done, and of course the first step was the securities aspect. So what we're doing is, today, we're really prominently featuring blockchain in multiple use cases in various roundtables like this that are going on in other rooms. What we're doing is we're really highlighting the overall advancement that blockchain would represent for data management, data security, encryption, permanence, and the permanence of blockchain, and everything else that it brings. What that represents for some of the largest commercial sectors, high finance, medicine, education, government. All of these things are use cases that are talked about hypothetically, but today, the panels we've assembled, we're taking on the initiative to select use cases, and over the next 3 years, we've made a commitment to a three-year project to take these use cases from whiteboard to reality. So, welcome. I do apologize for my tardiness. We had a bit of a medical situation earlier, so I do apologize. But we have questions. Well, you have questions, we have answers.
So I'm trying to get another gentleman here, but the lady there first, maybe?
Good morning. So I have a couple of questions. I was wondering, because it's a two-party system, the integrity, how do you audit the integrity of the information that's going in on a timely basis? Because you mentioned that the transactions can be 7 minutes to several hours, so I guess it's a capacity issue. So that's one question. And as well, on the timeline, how do you kind of control that so that the person that may be starting a transaction can actually finish it? If it's dependent, if you have a hedge fund and you can only get so many investors in, how do you guarantee that, that you can actually finish your transaction?
Well, there's actually probably 4 parts to your questions. So at least, and we could probably spend the afternoon talking about all of them. But the reality of it is, as a hedge fund, the investment life cycle inside of a hedge fund, and it's not an actively traded environment. That was one of the first things that we identified. So our hedge fund, and I'll let Ted speak to the structure here in a moment. But what we've done is I think the term is as a private fund. The equity is not for sale.
Correct. It's a privately held equity fund.
Okay, so it's a privately held equity fund. So the transactional volume in the environment that you're talking about, like on the NASDAQ and the New York Stock Exchange, where you've got high frequency traders and you've got all of the back and forth and the back and forth, that's not something that happens. So what we're doing in ours is we're taking the tokens that represent the value of the liquidation hard assets inside the hedge fund, which presents a real underlying value for the token, right? Because what we've done is assigned a senior position to the token holder versus the shareholders, which are less than 5 in our fund. So we've delegated the senior position on liquidation, capital gains, realizations, so forth and so on. What we've done is we've taken those and assigned those to the token holders. Now, in doing that, to alleviate the transactional volume and speculative trading, by doing that, once we've registered a public token that is freely tradable, that is not governed by the 506 rules, what we're able to do is put those on the secondary market, creating the speculation environment that you're referring to. So that's bandwidth that we don't have to deal with, and those bandwidths in most cases are dealt with typically with a web to database backend environment, no different than going to Amazon or any other Visa transaction you do on the web. So that to take that part, and I'd say does that answer your questions on the volume trading and the time? Somewhat. As I said, we could take all afternoon on that one. I mean, easily. But and then the second part of how all of this works in terms of how people look at transactional history and so forth and so on, our solution is actually two-part. We have the blockchain, which is, as we all know, is permanent, it's immutable, and everybody hears about blockchain explorers, and what is that, and how does that work, and that's a whole other day unto itself, how blockchain is explored. What we want to focus on is a solution that makes sense to Main Street. So what we've done is we've tapped into IPFS, the Interplanetary File System, which is a decentralized file system for those who don't know. And it allows us to take a Word document, an image, a movie, a video, whatever we want, and uploading it into that file system. And then we reference that in the blockchain hash. Using a blockchain hash, you're able to do that, but the IPFS system itself typically has a front-end GUI that's built for ease of use for Main Street. So you're going to go to the Blockchain Explorer if you're on the Super Tech side, and if you're in Main Street USA, you're going to go to a website, or you're going to go to an app on your phone, and it's going to pull up the real plain English document of it could be a letter of intent, it could be a memorandum of understanding, it could be the actual contract, it could be the wire transfer receipts, it could be the meeting minutes, it could be, I mean, it's no different than Explorer on your laptop, truly, insofar as it stores all of the same files. But IPFS, what they do is it's decentralized, and once it's there, it becomes permanent. So you can't, there's no delete. So once a project inside of our hedge fund is complete, all the deal is done, it's funded, everything's done, the investors have their tokens, the assets have been assigned, and everything's done, the whole package is then uploaded to IPFS, and the whole world can see from inception to completion the deal that entered the Alitheia fund.
Well, gentlemen, in the front.
We see a lot of tokens, coins, cryptocurrency now coming in the market. And there's a lot of competition now. Even big companies like Rolls-Royce now accepting cryptocurrency. Now, having studied all this for a long time, the mining industry and the cryptocurrency agency, the end question comes to how will we rate? What is the rating system of any of such product?
Well, do you want to take a stab at this?
Not sure. When?
Oh no!
I'll give you a clue. There are a lot of yellow pages type of companies.
Oh no,
which are
absolutely.
rating them, but they're not authentic.
Well, exactly. And if you caught Chairman Clayton and Chairman Giancarlo's testimony to the U.S. Banking back in June, the real underlying value issue is what they voice as the biggest problem, right? It's vapor. One day we have a $20,000 Bitcoin, the next day we have a $2,000 Bitcoin. I mean, does anybody know somebody who took out a second mortgage to buy Bitcoin at 18,000? I've met a couple. I mean, I know they're out there. I've met a couple, right? It's going to be 80,000. No, it's not. It's really, no, I promise, it's really not. So, how do you assess real value? Okay, so this becomes a question that is centric to the philosophy at Alitheia Holdings. To have real value, you have to dive into contract law. You have to dive into how contracts are structured and how contract law actually works. I'm going to let you weigh in on that here in just a minute. But basically, what we do, the token and the asset pool are part of a calculus that we are engaging third-party firms. I'm not going to promise. He's like, ooh, I can feel it. I can feel it. So what we're doing is we're auditing the entire asset pool against fair market value. We have three buckets. We have a primary liquidation bucket, a secondary, and tertiary. Tertiary, if we get all the way down to the tertiary liquidation, we're talking about catastrophic failure. We're talking about receivership. We're talking about FINRA said, you know what, this was fun, but no, right? We're talking about that type of an environment. A secondary is there's a mass exodus of our coin on the secondary market, and the price is being suppressed. And so we have to liquidate assets to start buying tokens back to burn them, which is a technical construct. Our CTO will be joining us.
So it's not collateral based?
No, it is not. It is actually based on fair market value of the assets within the pool. And as I said, the token holders are assigned seniority over the shareholder.
Yeah, let me talk, can I talk about that for just a second here?
Absolutely.
That's really a great question, Eric. So when you're dealing with all these cryptocurrencies that are sort of niche cryptocurrencies that are used for a particular industry, and they're not actually tied to any underlying asset value, what you're describing makes a ton of sense in terms of like a rating, you know, like people rate bonds or things like that. There's nothing that I'm aware of in the crypto space for that. Our approach is a different approach, and Jared was sort of alluding to it, and that is the approach of transparency, whereas we've built into our system an ability for people to see literally all the legal contracts as to what you own as a token holder, what the underlying assets are, what percentage of the returns from those assets you get, what the other investors are, things like that. And so our approach to sort of trying to inspire confidence with this is not a third-party rating system, but it's complete transparency within the system that people can review before they invest.
Because what I started was I was in a conference in Dubai last year. And we had a lot of people who were studying the concept of blockchain. At that time, we had a school of thought, a lot of attorneys like you, and financial professors and elites who have started making a small corporation for rating. So it's just in the making right now, but they're working big time on it. And wherever I go, I try to find out how would you rate your product.
Gotcha. Yeah, I think there's a real need for that. So
Yeah.
Absolutely. I mean,
Just to give a short anecdote on this one, but I had a colleague that was starting, I mean, he's quite talented, but he was starting a music website, another kind of music website, and he needed $20 million. He started to raise them the traditional way with bankers, and then he said, wow, why don't I do an ICO? And he just couldn't stop it. They actually raised $100 million, which in a sense he didn't really need, because his plan was for $20 million. So now he's expanding his plan and changing his plan. But to your point, the people that put $100 million into this venture, is it really worth 20 or 50 or maybe 100 now because he's using the money? It's really hard to say. I mean, I didn't invest in it. But
come on, really?
Gentlemen here.
Bear with me, I may have to ask a follow-up question or two. I'm very interested in the concept of backed cryptocurrencies. So I want a clarification, because on the one hand, it sounds like you're talking about creating your own tokens that are backed by assets, but you also mentioned something about Ethereum, and I'm not sure. How does Ethereum come into what you're doing, or did I misunderstand?
No, it was just, and you may have more information. My understanding of the technical side is that Ethereum is built in a way which is much lighter than Bitcoin. So in terms of usage of resources and speed, it's actually more efficient. But
Okay,
Well,
it has nothing to do with what you're doing, or does it?
well, on our end, it has everything to do with what we're doing. Ethereum was selected, one, because as he points out, it is lighter, but more importantly, it has a third dimension. Typically, the blockchain exists in the Merkle tree environment. Vitalik took it a step further and added a third dimension, a dimension of state. And in doing that, what he did was he literally opened the box up to allow us to do things like smart contracts, to run programs on that platform. Now, when we say run programs, now we're really getting into a deep dive of the technical aspect of how Ethereum operates and how the Alitheia tokens operate. Tokens are representations of smart contracts. A smart contract is a piece of software. I mean, it's no different than, Microsoft Office or anything. It's a set of predefined rules. In our case, we have smart contracts that govern who can buy and sell tokens based on their accreditation status. We have smart contracts that govern how long they have to hold those tokens before they're eligible to transfer them. We have smart contracts that govern the asset pools themselves, which each have their own individual risk reward ratios and calculus that we build. So it really is, it's a stack of programs, it's a stack of software, and that's something that's unique to Ethereum, particularly with the size and scope of Ethereum. Now, why is that important? This is really key. Ethereum, with its size, the cost to attack for what's called a 51% attack, because it's centralized voting, right? So if you can get 51% of the people to vote and say you've got $20 million, guess what? You've got $20 million. That's called a 51% attack. But the cost to run an attack like that in the Ethereum environment, unless you're gonna try and steal $500 million or $1 billion, it's cost prohibitive. So there are other tokens and smart contract structures that they forked off of Ethereum and did their own thing, but the reality of it is they are highly susceptible to a 51% attack. And this is the problem with the majority of the ERC20 structured altcoins that are out there that are not reliant on the size and scope and using Ether to run their environment.
So to make sure I understood you, so really the connection is only that you're using a modification of the Ethereum technology, not Ethereum itself.
No, we didn't modify it. No. We live on the Ethereum blockchain. Okay, this is a key distinction. A coin is represented by having its own blockchain, its own, and at that level you're talking about a protocol. Okay, you're talking about HTTP or TCP, right? It is its own protocol. Bitcoin, to write in the Bitcoin environment is completely different than what you would write in the Ethereum environment. Now, if you create a subsequent value inside Ethereum, that's a token. So we don't call it the Alitheia coin, we call it the Alitheia token, because it truly is not a coin. It exists and is written completely in the Ethereum environment, for the Ethereum environment, for the security that is afforded by the Ethereum environment.
And then the last follow-up, so you create your token, and it will be backed as specified in the smart contract by some kind of asset.
Well, backed is a very specific term in the securities world. So what we need to be very clear with, what we've done is we've assigned very specific cash flow rights, dividends, capital gains, royalties, very specific calculus to how much per token respective to the total token issuance, respective to the total token outstanding. All of this figures into the calculus that we used to build this. So you don't get shareholder rights. You're not able to vote on what projects it gets in. You're not able to call up and demand, so I invested in the gold sector, I want my gold bullion. We don't do that. You start going down that road, you get phone calls from people like Secret Service and Treasury and something about printing money in the United States, and they don't like that so much. So we are very specific in what we assign in terms of the rights afforded to the token holder.
Yeah, and collateral is sort of a loaded legal term. And what Jared is saying is that whatever the legal rights are, they are defined within the token, whether they're capital gains or a royalty stream or a contractual right or a secured contractual, whatever that is, they're defined in there. So it varies by project.
Just
on a project by project
Yeah.
basis.
Yeah.
Each project has its own smart contract, to be clear.
I'm really curious in terms of longer term projects, like schools, hospitals, power plants, that generally have a 20 to 30 year debt repayment period. How would this blockchain financing work on something that is a public-private partnership? It has a very long payout, and by default, if you do debt capital markets financing, you need to have a very stable structure.
I know.
I
didn't. Could he tee it up?
He's not with me. I did not put him here.
Please.
How about water? Is that a long-term?
Yes.
Will that use case work for you?
Yes.
We are currently in talks with a nation, can't disclose at the moment, but they've been under a drought for 7 years. They have coastal waters, and we're putting in a desalination project, and we are in negotiations for a 75-year royalty stream at a federal level. Ballpark 3 to 4 cents per liter per month per household. Our cost outlay to build the infrastructure, train for 3 years under the contract as it sits in negotiation today. Ballpark 2 million, 2.5 million. 46 million people at 3 cents per liter per month per household for 75 years. The rate of return is now profitable to bring water to emerging nations. For somebody other than Nestle, how about that?
Yes, I've got 2 questions. The first one is just general questions concerning the ratings from Standard & Poor's or Moody's. And
I'm sorry,
I was asking if there are any sort of ratings, for your hedge funds via the blockchain from S&P or Moody's.
Well, I can't name who I'm talking to.
Okay.
This man here will absolutely kill me in front of all of you.
Uh-oh.
So I can't tell you who, but yes, it is third party. Yes, it is highly respected. Yes, it is a firm that is over 100 years old. And yes, they are known for conservative valuation.
Absolutely. Thank you. My second question is, in terms of the SEC, are there any regulations? I mean, of course there are. That's my question.
I think this feels like a TED question.
I mean, just, like 1 or 2 main ones, or there are pretty many.
Yeah, so in the past, there's been a lot of confusion because the SEC regulations haven't really kept up with the cryptocurrency as a financing source. And they're back even just 6 months or a year ago, there was a lot of people that were arguing about whether or not the cryptocurrency tokens were securities or not. Our approach is the hyper-conservative approach that we absolutely treat them as if they're securities and are regulated by the U.S. Securities Exchange Commission, and we're doing a private offering of these securities under Regulation D. And so instead of going the path of either doing an unregistered or a public offering, we are working completely within the SEC framework on this aspect. And I think that's something that's relatively new, and you're going to see more people heading that direction. The laws are clear enough that you can raise a private fund and still comply with the securities laws, and that's our intent.
Gentleman in the back.
Oh, yeah.
Excuse me 1 second, if we could make a brief introduction. This is our CTO, Jay Bayoun.
Hi, everybody.
We're all coming in. I think this is it. I didn't get word on the 5th, but I think this is going to be it. I'm sorry. A question in the back.
What if the cash flow pool in a particular project did not materialize?
Well, we're focusing on a target number of 48 million as a cap in the Reg D environment under the 506C, targeting exclusively accredited investors. At 48 million, it really doesn't alarm anybody. In the risk management at that level, when you're dealing with institutional money, it's easy for them to come into an environment like a token represented hedge fund. And Ted was talking about the 506 compliance and all of that. I want to expand on that just a little bit. We make a very key distinction versus all of the other security tokens that are out there. We don't say we're a security token. We are a hedge fund that resides on the blockchain. We want to be treated as a hedge fund. We act as a hedge fund. We file as a hedge fund. We behave as a hedge fund. And once we reach the 100 million mark, I think that's 100 million, we become a reporting company, and we're going to be treated as a public company. It's incidental to, and in terms of how we're structured, the philosophy in our company, how we run this, it's incidental that we're on the blockchain. We're a use case for a hedge fund that migrated into the new technology to prove the new technology, if that makes sense.
I think, let me rephrase, I think you might have been asking something a little different. Are you asking what happens if the returns from the underlying project in which they're invested does not
Exactly.
Yeah, built into the contracts are sort of the liquidation priority and the liquidation preferences.
Correct.
So whatever you're able to get out of that will go back to the holders.
Yes.
Exactly. I'm sorry, I didn't quite catch that part of your question.
Dr. Arnold?
So I want to follow up on the example Oliver said about raising money, let's say the 20 million as example. Usually when the manager of the company, let's say, get that tokens, usually it transfer to dollar amount or it will stay at cryptocurrency, and what is usually manager can do to protect against this change in valuation?
The change in valuation of the token? or-
Correct.
Yes.
Yeah, so there's two sets of tokens. So the first set of tokens are locked and restricted, meaning that they just represent ownership, but they're not registered securities. Therefore, you can't move them around. So you can look in your wallet and you'll see that they're there, but there's no liquidity there. You can't do anything with it until that lockup expires,
Exactly.
right?
Exactly.
Which is actually written into the contract. So when that lockup period expires, there's a function call that you can make that will convert those non-S1 tokens into registered security tokens, and an S1 filing will be made at that time to make sure that those tokens are in legal compliance.
Now, in addition to that, we also have on capital gain events, where capital gains are realized on a liquidation event or an exit event, where the token holders are actually afforded the option to take a fiat distribution of capital gains, along with the shareholder dividend distributions that are typically associated with a hedge fund.
But to go back to your original question about moving to fiat, right? Because I think that's what everybody
You have
wants
to
to
move
do.
it to, let's say,
Right.
dollars to be able
Right,
to.
right. So there will be a secondary market for the S1 tokens, which various exchanges will be announced shortly, and then that's how you would be able to get to fiat dollars. On top of that, there's probably, I think we were talking about having a treasury as well. That,
We are.
Okay, where you can, there's a fixed rate where you can exchange tokens for fiat dollars if you choose to do so.
And that's based on the monthly valuation from the undisclosed, ultra-conservative, 100-year plus firm.
So we have 3 minutes left for our last question.
I'm just switching gears for a second from the whole blockchain aspect to the fundamental part, because a couple things you've said I'm trying to reconcile. So there's no trading in that they're not public securities, and you say you function like a hedge fund, but you have long-term private investments. What is the hedge?
We actually acquired physical bullion, gold, silver, platinum, commercial real estate, oil, gas leases. I don't know if I'd really call that a hedge, but
Yeah, I wouldn't call that a hedge.
I wouldn't either, but the physical bullion, obviously.
That's not a hedge either. I mean, I don't understand. I mean, so
I think let me see if I can clarify that. I think we're using a hedge fund in a slightly different sense,
Right.
that we are a broadly diversified private investment fund that hedges by investing in diversified positions, and that's the sense that we mean hedge fund.
So you have different longs.
Right.
Absolutely,
You have
absolutely,
a
absolutely.
portfolio of
Absolutely.
longs, which is not a hedge.
Correct.
No,
Correct.
absolutely.
Diversified
It's,
investment.
it's
So
loosely,
when you're
it's loosely
understanding-
termed.
Correct.
To be clear, it's
So you're
loosely.
behaving like a hedge fund, that's why I'm very.
Yeah,
I understood.
We're not doing short selling derivatives and things like that to
No, no, no,
hedge
no.
different
You're-
long-term futures
So why even
contracts.
call it a hedge fund? I think that's very.
Because everybody glazes over in the regulatory environment when I try and explain how this is anything else, and they all defer back to, so you're a hedge fund?
I actually would just, to your counsel, I would suggest that's very confusing.
I don't disagree with you, but it's just, after 17 conversations, it's kind of like, okay, fine, I'll call it a hedge fund. I'm with you. No, I'm completely.
It's a
with
hedge
you.
fund that's very much akin to just a traditional private equity fund.
Yeah.
So I guess we're at the end of the time. You want a closing word?
Okay, if I could actually get you to close out just a little bit on how the Alitheia token separates itself from other ERC-20s in terms of what we're doing and give specificity to, before we launch the ecosystem, what we're working on with the auditors and making sure that we're
So just where we are in terms of like
Yeah,
the
just-
project. Okay,
yeah.
so most of the token contracts themselves have been developed. We're going through auditors now, which is a separate process in the blockchain building process. So you have, me as a builder, right? I'll write the contracts, and then somebody who hasn't seen the contracts, we would consult with them to have them audit the contracts, because the way that smart contracts work is it's not like a traditional website where if you deploy bad code, you can just fix it later. Once contracts are deployed, that's it. There's nothing you can do. You can't change it. That's just the way that it will execute from now until the end of time. So there's a very extensive audit process that we're going through now to make sure that our tokens are fully bulletproof and unhackable. And there are also a couple of other governance and project-based contracts that Jared was alluding to that have specific rules and liquidations and payout rules and things of that nature, which are still under construction, but probably will be specific to each contract. So we'll probably have to write those rules in. as they become available, or as they become negotiated.
Yeah. Good.
We are at the end of the time?
Are we at the end?
Yes.
Thank you.
Thanks, everyone.
Thank you.
Thank you all very much.
No, I got it. Jared.
Oh, I was just, oh my gosh. Oh my gosh. I know, I couldn't believe it.
And I was downstairs for a while. I didn't know if you were here, if Sarah was here, I had no idea.
I was running around trying to tell her.
Yeah, I was with Ryan, and
Great.
Get your phone back. Sorry about walking out.
no, actually, my parents didn't have it. So
We're expecting to have some.
goes over next month.
Yeah, the 506 stuff, all that. That's all. That's been filed. We're actually.